This is The Bottom Line. The Bottom Line on 938 Live.
Now, the official US gross domestic product or GDP growth for the second quarter has been revised to 4.2%. That's up from earlier estimated growth of 4% on quarter. For more on this and an analysis of other macroeconomic news in the world today, joining us on the line is Richard Jerram. He is Chief Economist at the Bank of Singapore. Good morning, Richard.
Morning.
First of all, Richard, your take on the US GDP revision.
Yeah, it's something that was a surprise. I think the market was expecting a small downward revision, but in the end, corporate investment was a little stronger than expected, so they pushed it a bit higher. Of course, you have to see that in comparison with the first quarter when it was down 2%. So I think if you net that out, you get a cleaner picture.
So how do you expect the economy to perform this quarter then, based on that figure?
It looks like this quarter will be a bit slower, probably around 3%, and I think that's a more realistic guide to really what's going on in America. They have quite a solid recovery taking place, clearly a lot better than Europe or Japan, but I don't think you can sustain a 4% growth pace for very long.
Why not exactly?
Well, I think the potential is probably only around a trend of 2, and I don't really think that they've enough momentum in the labour markets to give you 4% for very long. I think it's really just a reflection of a distortion after an exceptionally weak first quarter.
You mentioned, of course, the labour market. Now, weekly jobless claims in the US for the latest week fell to 298,000 last week. That's a decline of 1,000 from the previous week. What's your assessment of the unemployment situation, given how the central bank indeed does use it to determine when to raise interest rates?
Yes, the labour markets are clearly recovering, and Fed Chair Yellen was talking about that a lot last week in Jackson Hole conference. I think the problem they have is there still seems to be quite a lot of slack in the markets. We'll learn more next Friday when they release the latest unemployment data. But they seem to think there's still quite a lot of slack left there. People will be pulled back into the labour force as the economy recovers. And as a result, they seem to be in no real hurry to be raising interest rates in America.
Let's look at Asia now. Japan's July core consumer price index rose 3.3% on year. To what extent is it on track to meet the Bank of Japan's target of 2% sometime next year?
I think it's not on track at all. And as you mentioned earlier, a lot of this increase in inflation is just because they increased the sales tax. Of course, that's a one-off effect, and that will disappear by next April. The underlying rate, if you strip out various distortions, is actually below 1%. And we also saw today some rather disappointing data on industrial production for Japan. So it does look as if the economic cycle is starting to stall. And, of course, the progress on inflation as a result is stalling. And I think that implies to me that the economy needs more support and probably more support from the central bank there.
Thank you very much, Richard. Richard Jerram, he is Chief Economist at the Bank of Singapore. Thanks for joining us on The Bottom Line.